the change beneath the change has to be system clear out so that you can deliver it cheaply and affordably. So the change beneath the change is no longer about innovation and more about a deliberate and relentless cleanup of your historic estate to reduce cost and reduce risk. We don't do that enough, and I'm sure we can talk about why, but I think the reasons are pretty well documented.
It's a deliberate design of new systems in order to minimize the costs and therefore enable the cheaper access, more affordable access to those solutions.
Welcome to the Issuer Academy, Paymentology's podcast to innovate, scale, and provide impact. I'm your host, Merusha Naidu. If you're a fintech professional, banking leader, or an innovator in the digital payment space, you're in the right place. Here, we deep dive into the challenges and triumphs of launching next-generation card programs, from virtual cards and digital wallets to cross-border FX solutions. Let's get started. Welcome to the Issuer Academy. Today's episode is called The Change Beneath the Change. Redesigning financial systems. It's all about looking past the surface of fintech innovation into a deeper transformation that is now reshaping how finance works, who it serves, and what it actually stands for. We're joined today by three incredible leaders who are not just chasing trends, but helping to rebuild the foundations of finance. First off, we have Pauline Molloyi, who is the acting COO of OM Bank. We have Leda Glyptis, author, advisor, professor, and chair of Bourn AI. And lastly, our very own Anna Porra, CRO and Paymentology. Pauline, Leda, Anna, thank you so much for being a part of the Issuer Academy. We're really so pleased to have you all here.
Thank you for having us.
Great to be here.
Thank you.
So let's jump right into it. I'm so excited to learn from the three of you. So let's start off with some big picture thinking, right? If you could fast track one change in South Africa's financial ecosystem, what would you prioritize first? Leda, I'll start with you.
Thank you, because everything I know about South Africans ecosystem banking in South Africa has come from working with Pauline over the last few years. So actually, I'm glad I'm going first because actually you can go to the master next. So one of the things I have learned over the years of working with Pauline and her teams is that difficulty in transitioning people away from cash. And one of the things I found fascinating is that the creativity that is being poured into not just building tools for people who are not, I don't want to use the word savvy because it's not about capability, but are not familiar and comfortable with using those tools. And then the additional effort needed into getting them to use said tools. I don't have the answers, but I have found that work absolutely fascinating and the commitment to financial well-being behind it absolutely fascinating. But obviously the people doing the work are the real unsung heroes here.
Absolutely. And, just creating that environment for adoption, right? Pauline, you're an institution in the South African payment network. I think everybody in payments knows you here. So really keen to hear from you.
I think just elaborating on what Leda was saying is that I think the industry has made great strides, like with, for instance, like the introduction of Pay Sharp and then Request to Pay coming into the space. However, I think we have up until now failed to fundamentally connect with the customers that we were trying to include into the net. So we've, by and large, a very successful implementation that actually where one digital payment stream replaces another one. So things have gotten cheaper. The question is, in all cases, does the consumer actually benefit from that? Because I do think price plays a not insignificant role in people adopting things as well. But I think if I were to, and it's not necessarily fast track, but if I could wave a magic wand, I really would want the industry to engage around creating common platforms to allow customers to utilize this so that it isn't, okay, it works at one bank like this and at another bank like that. And therefore, if my friends ask me how this works in a bank somewhere else, actually can't tell them. And that there is an enormous opportunity, I think, for fintechs to enter the space and help us create some sort of common platform in which people can access that. And we can actually start seeing PayShop displacing cash in our economy.
That's such an important point. I think PayShop is setting the foundation. That's the foundation layer of saying, look, this is the standard in South Africa that we're going to start off with. And from there, once everybody has that basic access, we can then build on top of that and start to build interoperability, as well as creating and shaping new financial literacy across the board.
I think we're just a little bit scared of, when you say standard, then people talk about the mechanics, the tech, and all of that is standardized. But if you want a singular message to go to consumers, you've actually got to standardize your interfaces. You got to show up in a similar way so that it becomes easier to access, easier to understand. And I think that's where, then we go into the competitive space and we all want to reimagine these things differently. But the consumer is essentially confused about what this is. And, in the industry, we all talk about PayShop. Talk to your friends that don't work in financial services. They go like, pay what?
Yes. How does it work? Do I have access to it?
Yeah, that's the thing.
Funny story. A friend of mine actually said to me what he rents out apartments. And he said he had no idea that his tenant was actually paying him via PayShop. He was just like, my rent arrives on time every single month. He had no idea. And so we also have to broaden people's understanding of how are payments happening, especially even if you're receiving, how am I receiving? Right? It's amazing that is now becoming more and more relevant in South Africa. Anna, over to you. What would you prioritize?
So actually, similar to Leda, I'm going to take a inspiration from my colleagues in South Africa as well as my clients. And I know that what's really, really close to their heart is around financial inclusion. And that's really at the heart and the core of it. So whether it's through increasing financial literacy, so making sure that people really understand how they can gain access to money and make use, and whether there is the importance and the need to actually swap out, as you were saying before, the digital card versus still going to the ATM and extracting the cash out. But also there are other more complex topics around perhaps having the right credit models to making sure that broader sets of the population also have access to the broader solutions and financial offerings out there, including credit, that then enables them to grow and expand.
Absolutely. When you look at even the topic for this podcast, the change beneath the change, the first change that we need to get to is access for all, access to financial services across the board for everyone. And from there, standardization across platforms, infrastructure, and facilities. And then from there, just learning and growing and saying, look, how do we really service this market and broader through the rest of Africa? Perfect. So now when we look at beyond the surface, what does real change really look like, right? Across Africa, and especially in South Africa, we've seen bursts of innovation, mobile payments, digital banking, new lending models, but often there's a tension between innovation on the surface and deeper systemic changes, right? So let's dig into this. When you hear the change beneath the change, what does that really mean to you?
Switch off the mainframe.
Yeah.
It's my favorite topic. I had a dare a few years back from a friend in the industry. He said I couldn't find a reason to talk about killing the mainframe at least once a day. He's been losing for years. As you were speaking, and I agree with everyone here, implicit in everything we said is that ultimately people need access to the financial system because they need access to funds, right? Like, payments are great, lending is better. So an empty bank account is no use to anyone. So credit models, affordable lending, distribution is important. Affordability is even more important. And the reason that affordability has been elusive is largely the cost of our infrastructure. We have historically carried best of breed. Nobody decided to create clunky systems when we had options, but those clunky systems are very much still there. And the vast majority of our financial services infrastructure is powered by systems of yesteryear, which creates complexity, not necessarily cost. I mean, every time I say death to the mainframe, people say mainframes are really, really cheap to run and they never fall over. And that is true. But the complexity around historical systems means that we have operational exposures, risk exposures, and cumulative costs of various technologies from different eras and different teams around them. So for me, when we talk about if the mission is affordable, fair lending, that is still good business, so it is delivered fairly and cheaply for the consumer at a healthy margin for your business, the change beneath the change has to be system clear out so that you can deliver it cheaply and affordably. So the change beneath the change is no longer about innovation and more about a deliberate and relentless cleanup of your historic estate to reduce cost and reduce risk. We don't do that enough, and I'm sure we can talk about why, but I think the reasons are pretty well documented.
The deliberate design of new systems in order to minimize the costs and therefore enable the cheaper access, more affordable access to those solutions.
And it's really starting from the ground up, right? A lot of, legacy platforms, they try to do bits and pieces rather than saying, okay, as you said, Anna, let's redesign it. Let's look at how do we change the entire setup so that it is more cost effective, and that cost effectiveness can run all the way down the chain and actually reach the consumer.
And that takes some difficult decisions. There's a story that Pauline has heard me say before. I was part of designing a card issuance system to replace a legacy system for a bank in Europe. The way we designed it, so cool, right? And it was delivering ahead of time, below budget. But we, entirely my fault, because it happened on my watch, we did not think about how you would design an identity asset that would accommodate people in witness protection. Will I ever forget about witness protection again in my life? Of course not. So we were super clever and had created this identity asset that would allow the system to know that you're already a customer, you have a mortgage or whatever. We're so pleased with ourselves. And then at the 11th hour, compliance were like, yeah, what about witness protection? Now, there were three options. One was to go back to the drawing board and hack something. They didn't want that. The second was to say, sorry, 5 people in the witness protection program, you can't have a credit card. And the third, which is the default decision of most banks, was they continued running the legacy system for, and I don't know that there were 4, but there was a small amount. So the deliberate design of systems is one thing. The operational cleanup around it's fine, just let the outliers run here, here, and here. And I think that's the hardest bit. We've gotten better at the innovation part. We've gotten better at the deliberate design of systems. We are still pretty poor at clearing the tail end. I worked in a bank about 15 years ago that had something like 70 enterprise license of Wall Street office, because they had been accumulated through acquisitions and mergers. And this one had a particular flavor and a macro that was designed for us. And it didn't feel like the most important thing that the bank needed to do to clean that up. But actually, across your entire estate, those operational decisions create all the headaches.
And it's small things like that where people don't think it's important, so they don't do it. They don't realize, A, there's a cost. B, you're all operating on different versions, and so that creates operational inefficiencies. But because it's something so small, it's just not taken into account. And that's really looking at systemic changes, starting from the bottom. Pauline, what does the change beneath the change mean to you?
That is so, just want to build on this a little bit, because we always talk about legacy systems, but I think there's another component to this, and that is legacy revenue. That is because we price for the legacy systems that we have in place. And when we start making the changes and we want to make things more accessible, we actually are able to do it more cost efficiently. But who's going to drop those revenue lines from their individual areas that they're responsible for and actually make those big decisions to make things more accessible? So I think that's the one thing. I think the second thing is that we often talk about creating these opportunities for financial inclusion, but obviously you always do it at scale in your business. And what inevitably happens is that the focus then always becomes about the existing customers, the existing customer base. How can I expand in that space? And you actually see that what was originally an initiative that was meant to increase inclusion actually just takes your existing business into a more efficient platform. And we kind of forgot about the fact that those were the objectives that we initially set out to change. And I think keeping ourselves honest around those things is super, super important. That is because the part that we miss, for me, change behind the change is what is the change that really changes customer behavior, what really impacts customer experience. And we often leave it at, we've now delivered the tech, we've delivered this, so now we're all good, right? It's working, so we're fine, but we have actually forgotten to take our stakeholders along and connecting with the original need we're trying to address.
And I think that's spot on, actually, because you've talked about the delivery of the shiny tech, or the tech that works with all the different subcomponents. So the technology stack is there, but what about the adoption?
Yeah.
And actually, you can't have change. You might have delivered the product, but unless there is the adoption, and therefore what's driving the adoption? Is it the knowledge? Is it the trust? So how do you go beyond the change? That might be the technical change, then make sure that it becomes systemic change and drives the adoptions by those for whom you designed the product in the first place.
Absolutely.
Absolutely. It's all about changing not just the tech, but the thinking behind it. And Pauline, I think the revenue piece that you pointed out is so important, because that is very difficult for any business to kind of, let go of. But it's the importance of understanding the why behind it and how it ultimately, again, impacts the consumer, impacts your business, builds trust with the consumer, so that you can then sell newer products. You can add in things like more lending services, as you said, Leda. So all very, very important points about change beneath the change. And I think this is a topic that everyone should be thinking about, because we should all be thinking about how do we do it properly from the beginning, right? Pauline, as the acting COO at OM Bank, again, South Africa's newest digital bank, you're in the thick of operational delivery. Where do you see the biggest gap between companies' innovational aspirations versus their actual execution reality?
And it is. So let me bring it home. I'm going to
Bring it
talk
right
about my
home,
own business,
please.
right? That is, I think the biggest challenge that you face into is the fact that putting the basics down is actually quite a significant task. So let's talk about cards right here at Paymentology. So seems to be the appropriate example to use. Is that in order to build a card ecosystem, you need your card processor, you need your core banking system, you need your personal bureau, your 3DS provider, your wallet provider. All of those elements are, in this world of software as a service, those elements are all built. They still need to be stitched together into the correct customer experience. Right? And as much as people talk about one API to another API, it still takes a little bit of time to actually do those things. So I think we are standing up the basic infrastructure that is required is a not insignificant task.
Absolutely.
And then once you've done that, everybody go like, my card swipe. And everybody goes like, why are you so excited about that?
Yeah.
Everybody's cards swipe.
So true.
So all you've done is that you've now put down the basics and say, I'm in the industry. So now what? Like, where does your innovation lie? You're in an interoperable world, so you also can't go off the reservation and design your own thing, because it won't work with everything else. So a lot of what you have got to think about along the way is, how do I innovate around my customer experience? How do I make the things that matter in this ecosystem more accessible? And then find the opportunities to do that alongside of your main deliverable and build that into the efficiency and the servicing of that product in your estate. And you've got to be deliberate about that, because also the thing is that setting up that basic infrastructure actually cost a significant amount of money. So a lot of your budget is actually going into the basics. So that means little budget available for you to innovate. So you've got to really think cleverly and pragmatically about where it is that you can touch that customer experience and make a difference. And let me just give an example to illustrate that. I think in the card world, we've seen people not utilize cards for like e-commerce transactions, but rather opting for screen scraping and sharing their bank logon details, which is far more risky, and it's a practice the Reserve Bank has dealt with now in terms of new directives and those kind of things. But people felt more comfortable with that than sharing their card details. And when you start digging into, so why is that? Is that because I kind of go like, well, card is way more safer. There's chargeback rights. There's all of those things. But the issue is, as an informed customer, I know how to access those processes. I know if I order a fridge online and the fridge never arrives, that I phone my bank or, and I fill out forms. That is a little bit irritated, but they'll get me a chargeback. I'll get my money back, and I don't have the fear going into that system. That is, I had an example of a friend of mine who phoned me and went like, I've had fraud on my card. You work for a bank. You know how this works, right? So, and she'd been to the branch. That is, and she had not gotten to the point where she had been able to submit a form to actually initiate a chargeback for the fraudulent transaction. So it was only until I went on Google, I found her bank's fraud number. I said, please phone them. This is what you tell them. And, like a week and a half later, she phones me and thank God I've got my money back. But the challenge for consumers is that if you don't know that and you have had that experience going into a branch, you don't have a friend that works into banking, you walk away, right?
Yes. And I think that's universal and global. Because it's a standard joke amongst my friends that I'm so much fun to go shopping with. Because everyone gets a little lecture about payments if something goes wrong. But also when something goes wrong, exactly as Pauline says, you face into it informed and equipped with the right language. But often you're facing into someone at the other end of a phone or in a branch who isn't as informed. And that is a global problem. Right?
It really
It's
is.
not a South Africa problem. It's an everywhere problem, particularly as these jobs are commoditized. So we're selling the consumer short twice because they don't have access to that education. And not everyone has a friend who works in a bank. But equally, the people they face into, be it the person who's manning the POS machine and your transaction doesn't go through, so they just say, pay again. You're like,
this card doesn't work.
That has cleared and settled meanwhile because you have real-time payments in quite a lot of jurisdictions and you've just paid twice.
Exactly.
And you don't know what to do about it. But equally, you go into a branch, you phone a call center. So the people that you're facing into that are custodians of that moment don't have that education. So we're falling short twice.
That's even more pronounced in places and cultures where there is that cultural shift taking place. So where card adoption is even more integrated, like in regions such as Europe, where cash is slowly moving away, but where cash is still king, and you're trying to drive and educate and encourage that adoption towards more digital payments, including card, then actually that knowledge, that security, the access to the information of what to do when is even more important.
Yeah. And it is then about how do you deal with the fact that that information clearly isn't flowing? So somebody would say okay, well, how is there an innovation around these things? The innovation is how do you give everybody a friend in banking?
Yes.
Yes.
But that's very true. That is a great idea.
Yeah. And how do you create an interface in your solution that is the equivalent of a friend in banking?
Correct.
But also it's a mindset in the industry of not shifting the onus on the consumer. I had an incident, it happened to my dad very recently. He made a payment and that payment should be free, but he had a charge, and he's at that age where he has the time and anxiety around these things, right? So he phoned his bank and they gave him a tall tale. And he came back to me. It so happened that I was at home. Otherwise, I wouldn't have heard the story. But he came back that his business account, which is dormant now because he's retired, is nestled under his personal account. And he accidentally made the payment out of the wrong one.
Oh, wow.
And I was like, well, that's not legal, Dad. That's not allowed. So you've either done a boo-boo.
Yes.
Or your bank has done a boo-boo. So get on the phone again to them and see that is not actually permitted in the European Union. Maybe it's allowed somewhere else, but it's really not allowed. And it turned out after several handovers that the system setup, the customer master, had been set up poorly in the bank, and it was their mistake. But they didn't deal with many people whose daughters are former bankers. So it was very easy to put the onus on the consumer and say, well, if you accidentally make a payment,
It's on you.
not check, it's on you. But it was the wrong setup. How many of those happen every day? I would say there's millions of instances globally where you don't have that friend in banking. It's on us again.
Yeah.
We talk about our innovation, we talk about our shiny systems, we talk about our best intentions, but every chance we get, we put it back on the consumer.
Absolutely. And again, that goes back to the change beneath the change. If we fix things fundamentally from a systemic level, customers should never face these kinds of things. So it's, being in payments, the onus is on us to say, look, we need to now protect our customers. We need to create customer-centric environments which are safe, that customers can trust. Because the more customers trust us, the more of our services are going to use. But again, we're creating real inclusivity, right? So, Anna, Leda, what separates buzzword-driven innovation from deep structural transformation?
Well, I think there's so much buzzword in our industry, whether it's embedded finance, whether it's open banking, even virtual cards. So going beneath the surface is really to understand how that type of innovation is actually enabled. So when you think about the virtual cards, there's so much that actually goes into it. You were talking about this earlier, Pauline. Getting a card to work requires all of different components of an ecosystem really to be stitched together. So even when the core piece is done, then it's actually getting the card in the hand of the consumer. So that then involves a mobile app that works, all the APIs that are suitably connected and making it easy journey for the consumer to actually use that virtual card, a mechanism for them to actually then look at their PIN, look at their card number in a secure way. So actually, again, thinking about the buzzwords, that's the outcome. But let's think about all the chain and the components of that solution that needs to be built accurately, simply, in order to make sure that the journey and the experience is easy for the consumer to adopt.
Just adding to everything that has been said before, the challenge is that buzzwords come with very shiny, very glossily produced reports, influencer videos, and it's all aspirational and clean because you haven't rolled up your sleeves to build anything yet. The minute you get into what I like to call the messy middle, where things take longer than you thought, where things don't quite work out as you thought, it stops being shiny and glossy. And by the time you get to the finish line, you're so bruised that even though you have succeeded, it doesn't feel uncomplicated if you are in the work. So I think the biggest distance is psychological. When you hear about quantum computing, the metaverse, and embedded finance, for a lot of people, they all slot into the same mental box. But the reality is some are very real and we're in the trenches of getting them built now. Some are miles away and some are really not very useful. Guys, let's get on with it. Which leads to the second bit, and that's monetization. And one of the biggest challenges, other than the fact that implementation isn't attractive, isn't sexy, it's very messy and very frustrating. The second piece is that we've had a lot of innovation buzzword, jazz handy activity without a clear and honest conversation about who's going to make money where.
Yes.
And sometimes that has been okay because the industry found its way. Embedded finance is a good example of the pies getting redistributed and the players are working out how to do it. Open banking is one of those areas where that hasn't quite been worked out yet. We've had some very aggressive regulation and quite a lot of the players are like, well, I'm going to do what you're asking me to do, but why?
Yes, why?
Like,
Where is the revenue
Who's
in
this for? And consumers don't have necessarily the education or the willingness to imagine a world where this is beneficial. So I think there is that element of, right, we've had the brilliant idea to the point made earlier. Now implementing it is where the rubber hits the road, and it will take longer than you think, and it's not going to be as glossy. Like, give me time to build this. But also some honest conversations about monetization. A lot of the stuff that has taken up columns, inches, and headspace in our industry over the last 10 years has been jumbled together. The useful with the empty calories, the things that are here and now with the things that might happen 20 years from now. And there is an inexplicable, to be honest with you, fascination that a lot of the builders have with the people who do a lot of the talking about things they've never had to implement. And I find that absolutely fascinating. It's like you're sitting here, sleeves rolled up, making small miracles happen on a daily basis, and you're listening to someone who's just saying words and feeling stressed because they built a vision of a world that feels too far away. It's like, it's fine. They're just saying words. They don't know how to make it happen. Go back to building.
And often because they don't know how to make it actually all come together, it's very much surface layer. So if you try and go one layer deeper, it's like, but why? You ask I always say to all of our customers, or at Paymentology, we say, look, if you're in a sales call, you have to ask the customer the 5 whys. If you get to the third one and they don't know why, then you got to go right back to the drawing board, right? Absolutely so interesting. And you're absolutely right. Next up, I want to talk about launching differently in a digital first world, because I think it's come to the point now where digital first, like we said, buzzword, but it's been around for a while, right? So how do we do it differently? Launching a new digital bank in South Africa, especially when you're not first, means you can't just copy the playbook. You have to build with differentiation and deep purpose from day one. So Pauline, obviously one of the newest digital banks in South Africa, OM Bank is fully digital and entered a market where digital banks already exist. What is your approach to differentiation? How did you ensure that the bank was designed to do things differently from the very start?
That is so not something I personally can take credit for, but the initial team that started OM Bank from the ground up was very determined to create a very clear vision of what this bank was trying to in how it was trying to differentiate. And yes, a lot of entrants have come into the marketplace, and existing organizations or existing banks have also been transforming. So you're not land in a world where nobody can do payments on an app. Every bank offers this. But if you talk to the general public, the discomfort with financial institutions still exists. Customers are still experiencing a huge amount of what we call information asymmetry. They look at this and they go like, well, people that have money, they get access to information. They get told things that help them actually prosper in this world. But to me, as the ordinary person, that is not accessible. That isn't, it's not the information is fundamentally withheld, but I can't connect with what is happening there. So in creating a vision that wants to make a change in that space, I think that's how you galvanize the energy that then says, I need to think about this customer differently. That is, I need to really engage with the fact that there are a lot of people that don't experience the world the way I experience the world. And I need to consistently also go back to those consumers, make sure we put those people in the room and literally put them in the room in a setup and talk to them. And when you look at things, you've got ideas, because we always think how we can solve problems for other people, right? Is it that you can't go like, have a look at this? The customer goes like, no, right? I mean, we put some stuff in front of customers and they go like, are you crazy? That looks like a damn game. Like,
Yeah.
you're handling my money. Can you please be serious? We thought gamification was the new frontier, right? And
Yes.
the customers we were talking to were like, no. Yeah, you can do some things, but I still need to get the feeling that you're taking my money seriously in this process. That is so how you connect with that. You've got to create and keep that conversation in the room at all times. And it sounds fluffy, but I think it is ultimately, if you infuse what you deliver with that constant feedback loop, you will create something different.
It's really about hyper-personalization around and being customer-centric, but at the same time, making sure that you stick to your brand identity of, we are still a bank. You can still trust us. And, it's what you're saying about gamification is so interesting because we've seen this. So, with some of the telcos that we work with, customers are absolutely happy for their app to look like a game where I log in and I spin a wheel and, that kind of thing. But as soon as I look at my banking app, I definitely don't want that. But it's the same customer, right? So how can you have so many different personas when dealing with different, financial services? So you're absolutely right. And I think one of the things that I find so fascinating about OM Bank, and obviously speaking to you, Pauline, Dion, Savani, and the rest of your team, it's how you've looked at personalization. It's really about saying, look, yes, it is one app for all of our customers, whether you're a sophisticated user, whether you're a first-time user. But the tools that you created to actually create hyper-personalization at a customer level, I think is so special.
And I think what for me is the differentiation in that is how you break away from what we see as the traditional way to personalize. So the traditional way says like, okay, well, you earn so much, you get a gold card, you earn more, so you get a platinum one, and whatever all the levels are that you build towards. But the essence of people's relationship with money, the income level plays a role. But it isn't the be-all and end-all of how I engage with my money and how I relate to the decisions that I need to make. And therefore, we work with very different archetypes in terms of how we then design that personalization based on how I handle money, how well do I think I'm in control of my current financial situation, where do I need help, how do I want to be spoken to, how do I want to approach those things, right? And this is the thing is that as I've got plenty of colleagues that go like, I'd like love to see like a big graph, and you're going to go like, give most of your customers a graph about how, and then go
No.
like, now, so what's that?
How do I
right?
get off the screen?
That is, so I think it is about looking at people more holistically in the way you personalize what you do for them.
Yeah, absolutely. And I think, Leda, you've seen so many digital launches over the years, right? What does a successful digital bank look to you? Beyond having just an app or a really snazzy UX design, what does it really mean now?
A really, really good question. I think we've had a lot of digital bank launches over the years, and as you say, I've been a part of my fair share of them. It's fair to say that when we started with the neos, nobody had a clear sense of what the business model looked like, and there was a belief. We're pretending it wasn't the case, but there was very much a belief that UX would make all the difference. So you're right on the money with your question, and of course, UX is not a defensible mode. It's very easy to copy. So we start talking about your stack, and are you quick to market? Are you running an effective business? And the jury's still out with a lot of the digital banks. But I think 10, 12 years into having a set of digital banks or corporate-owned banks, we have seen a lot of failures. We have seen quite a few banks that are still here, but the jury's still out, and only a couple that you would consider runaway successes. And I think it's inevitable that when you look at them, the reality, they have certain things in common, right? They had a very clear business case. They had a very clear idea of where they were going to play, how they were going to play, and how they were going to make money. It's no surprise that Mox was a success. They went for lending, hell for leather immediately because they knew that you need to make money, and that's how banks make money. It's no surprise that Chase was a success in the UK because they didn't play in their own backyard. And they went immediately for scale. They knew how they were planning on making money and doubled down on that. I think that's important. The second is they knew not to build from the outside in. UX is important, but it's a nice to have. The table stakes are higher. And the third thing is going back to what Pauline was saying earlier. Anyone who's operating in the digital banking space now, whether it's an incumbent or a JV or a new entrant, is playing with really high stakes. The entry level, if you're going to go for feature parity as well, it's a huge amount of stuff you need to build before you even know whether you can actually test your assumptions about your differentiation. So for the love of God, partner, build as little as possible. The banks that have struggled to make things work out for them are the ones that are hugely introspective, built everything in-house, one with a shiny UX, and 10 years on, you're like, you're doing okay there.
Yes, you haven't changed in 10 years. That's exactly right. Often when we look at a bank they want to own everything. They want control. They don't realize that by giving up some of that control, they're going to have greater flexibility built in. And I think that's really, a testament to OM Bank as well. Upfront, you guys were very, very clear about what is important for us to own, what we really care about. I mean, the fact that your app, uses different language for different demographics, I think is so, so smart. Because the reality is when I read something, I read it very, very differently to, my 18-year-old godchild. It's extremely different. She wants a one-liner. I want a paragraph. Very, very different.
And we see that a lot across our customer base as well. So the power is really to understand what is core to that issuer, to actually own and build and shape and deliver in terms of vision and differentiation, versus where to go and get best of breed perhaps from other providers, so that they will be ensuring that the composition of what their solution is made up of is constantly updated to the latest stage, but not necessarily having to impact their overhead.
But you're onto something very powerful that goes back to your very first question, the change beneath the change, right? Historically, decision makers wanted to own things. The not invented here syndrome, as we affectionately called it, right? So banks wanted to build everything, players wanted to build everything. Largely was habit, but to a very large extent, I think it's what you just said. People need to know what's differentiating for their business, but it's not always clear. How much of your stack is utility is constantly changing, and decision makers need to keep themselves sharp around that constant redefinition of, you know what, this is key. It's absolutely key to my success. But it's utility. I don't need to build it. I just need to partner with the best people for it and then hold them accountable to keep it fresh.
That's a scary notion, right? Because as bankers, we were all about building the things that made things a bank, right? So you build your card system, you design it, and you run it. That is at the point where somebody says, well, actually, you know what? Every card swipes the same way. All of that is like, there's nothing really different here. And I think in the beginning stages of this project, often got the question, how about the IP? And I kind of go like, well, the IP is in the MasterCard spec, right?
Exactly.
It's available to every single issuer in that space. But what it does, brings you down to the fact that there is a very small, finite piece in which you actually compete in the marketplace. And if you're busy with the other 95%, then somebody goes like, this is just 5% you're missing. But actually, that 5% your business.
Yes.
That's the 5% that creates a differentiated customer experience, that makes a customer decide to use your card versus another card. And that's a scary place, right? Because you hone down to the detail of where you actually have to make a difference.
But it's not a knock yourself out, do the 95%, because you have to build expertise in things that you don't have expertise in.
Yeah.
Waste time, money, effort to build things that are utility. Meanwhile, that 5% is becoming more and more elusive. And that comes from someone who's built a proprietary API gateway for a bank because they thought it might be differentiating.
And I mean, Anna, looping you into this because obviously OM Bank and Paymentology partner, but looking at removing that complexity to let your customers build what they need to.
And that's exactly it. So from a Paymentology perspective, we think obviously we've got clients here in South Africa, in Latin America, Middle East, Europe and APAC. I guess our philosophy is to make sure that we're building something that's complex, because card processing isn't easy. But we do that in a way that is actually accessible to everyone, so that across all of our regions, they get the same level of innovation at the same time on a constant basis. So we're removing that complexity from our clients so that they can focus on that 5% that makes the difference, making sure that they are focusing on how they address the needs of their clients that they're trying to reach in the best possible way.
Absolutely. And it's really about removing that complexity so that, innovators who are the actual banks can say, look, what does that customer journey look like to me? What am I who am I serving? How will I serve them? Right? It's giving you back your resources to do what you really want to do.
No, absolutely. And then once you start realizing that actually is quite liberating, right? That you don't have to own all of that complexity and you can focus your energy elsewhere.
Absolutely. So Pauline, just looking at partnerships, because partnership as a strategy for, deep change. OM Bank has, from the very start of, you guys putting together the digital bank, you kind of moved forward with that strategy in mind. So Pauline, what do you look for in a partner to ensure operational alignment and real value in delivering when you look at partnerships and who you partner with?
Let's park all of the usual RFP stuff, right?
Yeah.
Commercials, the architectural alignment,
all the standard stuff.
All of that stuff, which obviously takes up a big part of that process, is that, ultimately everything in a partnership is about the people that you do the work with. That is, so in establishing those partnerships, what is very, very important is to get an incredibly good sense of who you're partnering with. And that does mean that you have to get beyond the sales layer of organizations. So we've seen very good insights coming out of single use case POCs we've done with some of our partners, where once you get beyond the layer and you start engaging around like how would you deliver this to us, you get to engage with a very, very different group of people in the organization. You get a much better sense of what their ability to deliver to that is. So I think that those things are, not in all cases possible, but very useful in the selection process. I think the other thing which is very critical is that when you engage with a partnership team, a sales team, a customer success team, every organization has a different name for this, is to actually talk to them and work out what kind of mandate do they have into the organization to support you. That is, so a traditional sales team is a sales team that sells you the thing does, by the way, usually does the system demo that goes wrong, right? The one where you got stuck halfway through the presentation. I think where these things are more integrated and you actually understand what that model is, the access you have to people advocating. And Anna, we were having that conversation yesterday. We had a little wobble. Is the what is the ability of the people that we know in the organization that we've built a relationship with? How can they step in to actually advocate for us and get these issues resolved? Because that's what matters, right? Of course, we have a contract and there's SLAs and severity levels and escalation routes. But by the time you get to that, you're not in the best situation possible.
It's
It is
gone
about
past.
If you're invoking the contract,
That's a problem.
then you're really, really not there. It is can I pick up the phone and have a person that I can talk to? But then secondly, does that person have mandate, whether it's formal or informal, but they actually are able to galvanize and help me resolve the issues I need to have resolved?
And I think it's a mind shift, isn't it, between vendor relationship and true partnerships. So actually, how do you engage with each other? Is it just a one shop, you've done your contracts and now you've got a vendor relationship, as opposed to how do we jointly develop, co-create, support each other in the growth? And I think that's really at the core of that partnership success.
And I think that's where the contractual construct of software as a service does play a role. Because as much as we are vested in the success of the business, our key partners are equally vested, because their revenue isn't a annual license fee and no worry, as long as you can pay and don't care how you do. This is actually linked to how many cards did you issue, how many customers. So that creates a very different conversation with people. And I think the right kind of partners that I can see in our environments are the ones that are going like Pauline, not just, okay, I'll account for what I'm doing, but please come talk to us. What are your plans? When are you running your marketing campaigns? When are you thinking you're going to onboard? Like, can we put some people on standby when you do events and all of those kind of things? So it's that kind of like we both need this business to be successful that galvanizes a lot of that energy.
Absolutely. It's not just about the ecosystem anymore. It's more about we're all in this together. Your success is our success. It's one and the same thing, right? And I think it's absolutely critical and important to say, look, what partners and, even in our world, when you're putting together that ecosystem, it's so important to align the cultures of the companies as well, to say, at the heart of it, we want to serve our customers. We want to do things with excellence every time. And if there is a problem, like I always say in payments, nothing ever just runs smoothly. There will always be challenges, regardless of what it is. It's about how you move forward together and work together to fix it and make sure that it never happens again, right?
But it's also, I think the thing is that one does need an interlinked ecosystem. This is the part that we're saying like, okay, well, it isn't just about us and yourselves, right? Function yesterday, Crossgate is there as the Perso Bureau we integrate with. I know you have very solid relationships with MasterCard. So the fact that not only do your partners talk to you, but the partners also talk to each other in achieving the overall result is another key component of how these things actually work. Because otherwise, in South Africa, we say kippy in the middle, but you become the person that runs around and goes like, but Paymentology said this too. And please, actually people can collaborate across that ecosystem as well.
Do it jointly as opposed to in silos. So instead of bilateral relationships, how can you actually leverage the multi-touch points across the value chain of different partnerships? You just resolve problems much more quickly together and actually plan for your growth together as well.
Exactly.
Absolutely.
And we never want OM Bank to ever worry about an ISO spec ever.
I'm very grateful for that.
I want to take one step back, just looking at, we're in beautiful Cape Town today. And, when you look at the South African industry and how payments are shifting, I really want to look at how do we build for purpose, right? Because in a market like South Africa, purpose isn't a nice to have anymore. It's critical. The legacy of exclusion and the huge needs for empowerment mean banks and fintechs have to be more you have to be more than just products, right? You've got to be about real change in South Africa, especially now that, as we've all been saying, financial inclusion is a huge part of what we're trying to achieve. Pauline, how does Old Mutual's mission to delivering value to its customers shape your operational decisions in the way you use data, especially when it comes to building trust and managing risk?
So data is a much talked about topic. And I think as banks, we've often looked at data as the thing we get and the thing we utilize to our best ability to feed our credit models, to design product, to understand what we think customers are looking for. But we fail to acknowledge the privilege that the customer is giving us in sharing their data with us. So I think a big part for me is that how do you utilize data to give value back to customers? So I'm not just getting the input, but I'm actually utilizing that. And I'm not just utilizing that for me to make a better credit decision, but I'm telling you about your financial position. That is because I think as you build up more knowledge, you can get to situations where you know more doesn't always lead to easier access to credit. Because sometimes when you utilize aggregated data and fill out some standard answers to questions, it may be easier, right, to grant a customer credit. When you actually truly understand what is happening, you may make a different decision. And then the question is, how do you relay that decision to the customer, and how do you help them understand that the decision you're making is a fundamentally correct decision, because extending a credit line would get them into further financial troubles. And let's be real about it. Nobody likes to be the client, and it isn't a message that resonates well. But how do you create experience around that? Maybe not right now, because right now I needed the money and don't want to give it to me. But as I'm reflecting on it, and as I'm looking back at some of this information, at how I displayed that back to you, at how I explained what was going in, that helps you understand your own financial situation a hell of a lot better. And I think that's, for me, is where the pivot sits in terms of utilize it as an institution, but also utilize it as an asset that your customer is sharing with you, that they can see the value of in terms of that. Because how many times do you provide information and then that organizations have of you all the time? And at the simplest level, when they give it back, and you go like, okay, why do I need to fill out another form? And I need to tell you all of these things that I already told you a number of different times. So how do you help me to actually create a better customer experience in utilizing what you already know about me?
Absolutely. It's creating real empowerment and giving it to the customer to say, look, I'm giving you the information that you can actually do things like understand more, self-serve if you want to. You don't have to fill out a form, right?
Yeah.
So absolute data is key to actually empowering our customers. Anna, you wanted to add?
Yeah, just on the other way around. The more that we know about our customers also allows us and the issues and our clients to give something back to the client, to their own cardholders, whether it's through loyalty and rewards. If we know how cardholders make transactions, what they're buying, when, where, and what retailers, if there are any significant changes or lifestyle changes that they're going through, if they've bought an airline ticket, how can issuers then use some of that data and information to package up and deliver really tailored rewards and loyalties back to the consumer, so that they can feel that they can get something out of sharing some of that information.
That's very true. And I think a big challenge that we obviously have is this cash economy. And the problem with cash is that it doesn't give you data. That is because when the customer pulls the money out of an ATM and walks away with it, we don't know what happens with those funds subsequently. And it therefore limits your understanding of that customer significantly. So the way you use rewards in actually stimulating the right behavior and sharing those things with customers and helping them realize that there actually is benefit in doing things in a particular way is critical. So I think rewards plays a role. I also think there's a transparency of pricing around it, which I think customers don't always realize, that actually their ATM fees that they're paying to withdraw the cash could easily be a lot less if they only use digital payment streams. But the thing is that if stuff is so opaque that you don't get that, then you will go the familiar route around this. That is because I do think that in the entire ecosystem, there has been a lot of change, right? There's been a lot of change in card acceptance, for instance. That is, it is far more accessible than it used to be. Now the thing is that will consumers actually utilize those?
Absolutely. And looking at that, changing consumers and changing the system. Anna, Leda, globally, what trends are you seeing in how consumers are expecting to interact with money? How should fintechs in Africa respond to what customers are asking for? And what risks do these institutions who can't evolve quickly enough face?
Oh, such good question. So as I was listening to you, Pauline, I had two thoughts top of mind. One is that you need to have the agility inside your organization to go for a lot of trial and error to work out what will work with consumers. And so to your question, most organizations don't have that agility because they will introspect and go through analysis paralysis a few times before they commit to one or two ways. So if one of those two bets don't work out, the internal process to come back to the drawing board is crippling. And that is a huge risk. So number one. Number two, the second thought I was having as you were speaking is that one of the things we've seen globally is that people learn extremely quickly when you get onto the right thing. And although trust is slow to come, digital savviness and comfort comes once you've gotten the right thing, comes much faster. So when I was living in Qatar, we did a piece of work around card adoption because what we found was that the local population was not using cards at all. The expats were using them to the same level of comfort as the country they came from, but the local population were not having any of it. And we started doing some research and we found two very interesting things. The first one was that a lot of people weren't using cards because of the latency of the point of sale machine. So it felt rude to the person behind you in line. Cash was faster. So you can actually fix it by improving that latency. And the second was that young women specifically were using cash because it helped them to budget. So we started this thing that irritated the hell out of me, where every time you made a transaction on your debit or credit card, you'd get an update, you'd get an SMS with your updated balance. Overnight change in behavior. But because we're talking, this is like a fishbowl population, right? Very small country, very small population. It took 6 months for that behavior to settle, the mental model to shift, and that SMS to become annoying. It took us several years to stop sending the SMS, but that's another story. So I think the two biggest things are it will take a few attempts to find out the thing that works for the different demographics in your population to shift their behavior. And so you need to have the agility because the risk is you stick with the wrong thing for too long. And then you have to assume that your population will actually learn quite quickly. And then you're going to need to do it again for the next iteration. And those things mean that you have to have a learning, adaptable mindset that most traditional or large global organizations, you don't even need to be traditional, don't necessarily have the process to be A/B testing approaches every few weeks. But that's what we're going to need because people learn super quickly.
There's so many things to unpack in that. So firstly, cultural nuances, absolutely. I mean, just having that knowledge of this is what the fears are, the pain points are for customers. If you look to those and try to solve it, absolutely, that is key. The second thing is having the courage to pivot or adapt or try something different is absolutely critical to these institutions. And so, Anna, I know I'm handing over to you.
Yeah, I'm just still reflecting actually on the things I've just heard. And again, the cultural nuances are critical to understand. So in some markets, virtual is how it works. In other markets, talking from a card perspective, card in hand is still the only way that it operates. So you really, really need to understand those differences. I'm wondering, one of the things that I see constantly across all of the different regions is the need for simplicity. So whatever the form factor, whatever the solution, I think what's really, really key for the consumer is that whatever they're using is going to be super simple to understand and transparent so that they can build the trust and end up using it more.
Absolutely. That trust factor as well. And like Leda says, once you build up, once customers have a basic understanding and they've accepted it and it works well and it does even the simplest things for them, that's when you build true loyalty, true trust, and you actually then are able to say, Let's now introduce something new because you trust us, you believe that it works, we have you on board. It's so, so critical. I want to wrap up and, some of our final thoughts. So when we look at designing systems for the future, looking ahead, financial systems have to be resilient, they have to be inclusive, and they have to be deeply connected to the communities that they serve. Again, looking at Qatar, especially in fast-changing markets like South Africa. PayShop is another example. Pauline, what's one operational mindset shift you believe South African banks must embrace to stay truly future-ready?
I think my thought on that is that stop underestimating your customer. We often think because adoption on certain things are slow, therefore customers cannot adopt. And I always think about, when I grew up, we go to the bank branch with my mom to draw cash, right? And when ATMs came, those things were pretty damn intimidating. And for the best part of his life, my father thought that the money came out of the biscuit tin that my mother put the cash in after she'd gone to the ATM. And it was after my mother passed, quite a tutorial that my brother had to undertake with my dad to get him into the world of drawing cash at an ATM. But people can learn. People absolutely can, and they overcome the hurdles. There are plenty of examples where we've seen things in the marketplace that aren't super simple, but the utility of them has been so powerful that people teach each other. Right, which is why I raised earlier is that kind of common ways of interfacing and interacting are super important to help those processes along. But don't leave people behind. Don't underestimate that people can't learn is not a thing. You don't know how to teach is the issue.
I absolutely love that. Do not underestimate your customer. That is so, so important. It's about how we, again, empower them, give them the information so they can learn. Absolutely key. Anna, looking ahead, what's the biggest untapped opportunity you believe payment companies should focus on to better serve emerging markets like South Africa?
I think it's around access to credit. It's really about finding the right models that address the different pockets of the populations that might not have the most traditional, topography of information accessible to the banks or the financial institutions. So really identifying those decisioning models that have broader reach and then enable the access to credit to the broader parts of the population as well.
Absolutely. And credit, again, because not many people in South Africa actually have access to credit. So building very simple BNPL solutions to start off with, figuring out how to even create a credit score for somebody who's never had credit in the past, while at the same time looking at how do you drive revenue from the very start. All of these things are actually critical. And so credit is the key to unlocking all of that.
Also done in a very controlled and secure way. So you parallel the access to credit with a lot of education around how that credit should be used and the impacts and the broader consequences, etc. So those two things need to be done in parallel.
Couldn't agree more. And Leda, you've witnessed multiple waves of innovation. What's the one principle or mindset that should guide the next decade of the fintech evolution and, new digital banks that are coming up?
I make my tech teams cringe when I say this, but the tech doesn't matter. The tech is absolutely irrelevant in its essence, its utility. So don't lose your head. Don't get emotionally attached to any tool. Use anything and everything that comes your way that allows you to deliver against all the things we're talking about. That means several things. It means that if you are partnering with someone who starts describing their solution, starting with their tech choice, run, because they will not be able to evergreen that choice. They will be too emotionally attached to a particular posture. But it also means that your mission and your commitment to delivering for your clients in a particular vertical are the only things in your business that won't change. Every technical component, every technology choice should be swappable outable. New word.
Swappable outable. I'm going to quote that.
Yeah. I have to do it slowly. Nothing is essential other than what you're using it for. And it's a massive mindset change, particularly because of the way we've bought technology for such a long time. People have come into the space because they were particularly inspired by a thing. And it was API first for a while, and then it became DLT for a while. And now you're hearing so many people telling you that their solution is AI powered before they tell you what it does. I don't care. What I care about is how it helps me deliver against everything we're talking about. So not being emotionally attached to any particular technology and anticipating 100% that what you need is an evergreen, scalable, resilient stack. And that means that as the world changes, you'll be swapping everything out. And so every decision you make needs to be made on the assumption that your partners will stay if they continue delivering for you, but the components and how they talk to each other won't be there for long. That changes the way you operationalize everything.
It has to be a constant evolution. That change beneath the change needs to be happening continuously as you grow and as you scale. Couldn't have said it better myself. That was probably, I'm going to use that, by the way. And that's a wrap of today's episode of the Issuer Academy. Today's conversation reminds us that innovation isn't just about building new apps or services. It's about rewriting the foundations of finance with purpose, of inclusion and community impact at its very core. I'd like to thank my guests for joining the Issuer Academy. Catch you next time.
Thank you.
That wraps up today's episode of the Issuer Academy, Paymentology's podcast to innovate, scale, and provide impact. I hope you're leaving with fresh insights and actionable strategies to help you revolutionize your card programs and drive true impact in the world. If you've enjoyed today's conversation, please leave a review to help us reach more pioneers like you. Also, be sure to subscribe and follow us for more inspiring episodes and behind-the-scenes content from Paymentology. Until next time, I'm Merusha Naidu. Keep innovating, keep scaling, and keep striving to make an impact.